Simon, how do you arrive at these figures? 15 billion in costs and potentially up to 40 billion euros in extra capital requirements.
Yeah, sound like big numbers, Ian, and they are. What we did was actually interviewed our end customers because it's really important to hear from the corporates. So we spoke to SMEs in Europe, we spoke to the larger companies, 62 in total, and we said, what are your major concerns about Brexit? And they have major concerns. But then we looked at it from a banking point of view and said, well, what will the cost be of having to restructure? And the 15 billion is related to the ring fencing costs, you remember, from the UK, and the 40 billion is related to the capital that might have to move from the UK to Europe. So big numbers, but we did take a hard Brexit as our proposition, and of course we don't know yet what's going to happen.
And simplistically put, this pushes up costs for business because the cost of capital is pushed higher.
Absolutely right. And if you're an SME, you probably have one bank that you rely on. You probably can't change your bank that easily. You probably have fewer resources. So I think the SMEs are really saying, hang on, this is a serious problem for us, and actually, of course, the time frame is quite narrow. So I think the message from the report, amongst others, is let's make sure we have an understanding as to how this all works.
Now, you mentioned there this is a hard Brexit scenario. I mean, realistically speaking, we're not going to get that, are we? Not when Michel Barnier, who's leading the European Commission's negotiating team, has said that a specific deal is going to need to be done for the city.
Yeah, they also said this could be late on in the process, and what customers want is certainty. And I think what we might find is the whole kind of discussion around transition and implementation waits until the end, and that's too late. So the message we're saying is plan for the worst, but hope for the best.
As we were saying, there are these separate developments today. The City of London, representatives from the city going directly to Brussels, ostensibly with tacit government support. Do you think this is being driven by the Treasury because the Treasury is more pro-financial services than other parts of the government?
Well, I'd love to reveal the inside track on this, but I can't because I've just read what you've read. But I think what's interesting is Mark Hoban, the former city minister, very well respected. I think it makes a lot of sense for him to be in dialogue with Brussels. One of the lessons really learnt from Brexit is that there's a potential for misunderstanding. So if Mark is out talking to the people in Brussels, that's great. I think what's really important is let's be coordinated, though, about the efforts across the industry.
Well, quite. I mean, this is going to put the cat among the pigeons. I mean, the car makers presumably will turn around and say, well, hang on, if the city's allowed to cut a special deal with Brussels, shouldn't we be allowed to? Scotland, Nicola Sturgeon wants to stay in the single market. I mean, that's an issue for her as well, isn't it?
All industries are important, but this is a 15% of GDP industry, 2 million people employed in the UK. Obviously, we're pan-European. You can increase those numbers significantly for Europe. So I think it is right there's a focus on this industry, but it's also right that we look at it through the end customer piece as well.
I mean, you and your team spend an awful lot of time in Brussels. Do you think there's a desire to make sure that the city is looked after? I mean, after all, the city services the whole of the EU and provides value for them as well. It's not just a British thing.
Well, think of how much capital markets activity comes through London. So I think the reality is that if London gets completely detached from Europe, capital markets activity in Europe is going to be affected as well, which is another message from this report. The big challenge for Europe is economic growth. A fragmented capital market in Europe means less economic growth. So there's a sort of opportunity to have a win-win here, I think.
So you ran Gordon Brown's Downing Street press operation for a while. I mean, if you were Director of Comms in Number 10 now, what would you be saying about all this?
I think I'd be saying we've got to be very transparent. This is a negotiation which is going to be played out in public. It's the biggest divorce in history, and I think what's really important is that the government here and the EU explain what's happening and how it's happening. That sounds as though that's difficult to achieve, but I think the die is being cast. So effective communication about what's happening, when it's happening, how it's happening is really important for the long-term success of Brexit. And the clock is ticking. I reckon we've got 10 negotiating months to get this done.
10 months?
Yeah, if you take out some holidays and the rest of it, 10 months probably to get a deal settled. So that's why an implementation period at the end of that is so important.
All right, the clock is ticking. Simon Lewis, good to see you. Thanks for joining me.